Hey guys, what's up? This is Tyler from Division One Trading coming at you with a quick trading video. So in this video, we're going to be talking about New York reversal versus the New York continuation. So on any given day, we want to see Asia be pretty consolidated, right? You can see that it's pretty much just stuck trading back and forth. Then London can do whatever kind of pattern it wants to give, right? It can trade up, it could trade up with two legs, it could trade up with just the one, right? London can really do anything it wants. What's key is what starts happening after London. So let's start here with the New York continuation. I showed this the other day, and we'll talk about both scenarios on US 30. And again, we'll talk about New York ending as well, because this is just for New York. It's not for post New York. It's only for the New York session. So, right, post New York kind of turns into a different animal. But we're keying off of Asia and London. So in this example, we're looking for a possible continuation. So when Asia consolidates and London trades higher, the first area that we could be looking for is that London low, right, for the break and retest. So when we see this leg form, we either know it's going to retrace and go higher and take out London's high, most likely, or it's going to reverse and go lower and take out the daily low. So the key is what happens after that leg, right? The key is what happens here. We get that break in structure, it trades down. Now this becomes a retracement, this leg here. So when it retraces up, we're expecting this to be a failure, right? A lower high, and then we're now expecting lower low, right? And so that's continuing, that gives a continuation of that movement, because really all we're getting is bearish London and bearish New York, right? This is all just kind of the noisy retracement. So vice versa, we have the same situation, but with a New York reversal, right? So if we're expecting a reversal, again, it's going to be in this leg here. So London trades higher and then trades lower, right? Same as this scenario over here, the continuation. So what's different? Right here, we go to start New York, and then we fail to make a lower low there. So we can't make a lower low, and then we trade higher. Right now, we have two levels that are bunched up right near the high of the day. And then that gives us an opportunity just to look for a retest right here and get long with the New York reversal. So let's go ahead and hop into the charts real quick and talk about that. Okay, so I do recommend rewinding and taking just a quick picture of those little flashcards that we had. That way you don't have to keep looking back, and I don't have to put them on the screen and take up room. So, right, we have New York continuation or New York reversal. We like to keep it pretty simple, and we're mainly just talking about this New York box, not what happens after New York. We can talk more about this in the future, but we're really just focused now on what goes on here. So we have a good consolidation for Asia, and then London trades higher. So a New York reversal would send us lower. New York continuation would send us higher. So I want to talk about the top of that session. Right, you can see here, price really traded at New York, right up toward it, and failed. See how we open right here in New York, right next to these lows? And we failed to take them. We trade down toward them, talking about this specific candle right here, right? Trades down toward them, but can't make it. And so it trades higher and then gives this push here. So now when bond open comes around, right here, and it reaches down back into that structure, right now we can get long for the New York continuation because it's not breaking down any significant lows. Right here, bond open starts, trades down, reaches higher. So that's our New York continuation. So let's talk about this scenario. Again, solid Asian session. Then we trade below London this time. Right, so we're either looking for a continuation there or a reversal. And so we'll talk about this scenario. New York opens. Look at that high right before New York. Right here. So they trade up to it. And let's see, 27. They go right above it. So they trade right above that candle with that wick into this structure, and they give a continuation right there. Once they give that continuation, right, we're still waiting for 1630 GMT, which is our bond open. So now we give that New York continuation, and then we pause, right? You see this consolidation. Then bond open, we expect volatility, and you see we get that New York reversal right there. And so this is where price can get a little tricky, right? Because I don't want you to just think about this structure, right? We can still think about Asia's structure, right? And so when it trades up toward Asia, it's right up next to it and then ends up breaking down. Now, this is a little more difficult of a trade, and we don't want to talk too much about post New York today, but it does give some opportunities. This one just ended up getting stuck after the reversal and then gave pretty much what we call a post New York continuation, where right as New York is ending, fails to make that higher high and then drops down. Ended up being a super tricky day because it ended up coming all the way back. That's why we only trade this pattern for New York, right? There are things that we can do before and after, but generally we want to stick to, if we're just trading the New York continuation and reversal, that's what we want to stick to. So let's go over one more. Right here, we have a nice consolidation in Asia again. London trades higher and then comes back into the middle. So we know that we're looking at 1630. Right there, bond open, and we know that we're looking at these structure points. Right there, we have London's high. So it trades toward London's high, reaches up, and then ends up giving that reversal. Right, so this is a situation where things could go either way, and then the bond open price action just gave it here. Talking about gaps, we can talk more about those in the future. So once it trades down into that structure, now we can understand it's most likely a New York reversal, and we can look to try to get short back in line with that. So once it trades down here into that structure, proving that it's willing to break through it, we can measure that with a fib. That's our post New York move again, but right, this is what we'd be looking for, is that New York reversal into the structure. All right, guys, I hope this was helpful. Let me know if you have any questions. Thanks.